The world of billionaires are sitting on cash, and this could push Palantir's price higher. More buying power from the world elites is now here. This is caused by the decision of governments across the world. But how will Palantir take advantage of this? Are these rumors even true? Let's not waste a second and let's get into it. Disclaimer. There's now a lot of Palantir shares available for buying, and there could be a lot of billionaires scooping these up. So what's the potential reason for all these shares being available for buying? For one, Peter Thiel has sold a significant amount of Palantir stock this year. Recently, he sold nearly $600 million worth. This brings his total sales to over $1 billion in 2024. The downside to this is that Thiel's selling raises questions among investors. They wonder about the future of Palantir and its stock price, and this could have driven the increase of short sellers. In fact, according to a post on X, there are tons of short sellers that still think that Palantir is overvalued, and they want to bring Palantir's price down. However, Palantir has a secret up its sleeve, and it's not even something that they did. The situation that several governments are putting them in could be extremely beneficial for them. So, what happened? Hear me out. The recent yen unwind has made the yen stronger than the US dollar, causing a frenzy in the market. And this is an exciting time for US companies, particularly Palantir. Investors have been paying close attention to this change, and it's shaking things up. With the yen gaining strength, many investors are now shifting their strategies. Especially in Japan, both individual investors and investment firms are looking at new opportunities. And here's what's even more exciting. A stronger yen means Japanese investors now have more purchasing power when buying assets priced in US dollars. This shift is creating a window for Japanese investors to buy US-based companies at what feels like a discount. One of these companies is Palantir. Not only are they performing really well, but they're also gaining a lot of attention globally. Basically, Palantir's stock has become a hot topic lately. The good thing about this is that the stronger yen could lead Japanese investors to buy more shares of the company. Palantir is already gaining attention for its potential growth, and this recent currency change could drive even more interest. Japanese investment firms, which control large amounts of capital, might see this as the perfect time to buy Palantir stock in bulk. Individual investors in Japan, who want to make the most out of the stronger yen, could also start purchasing Palantir shares. This influx of Japanese investment into Palantir could benefit the company significantly. More buyers in the market usually lead to an increase in stock prices. As the demand for Palantir grows, its stock could see a notable rise. This isn't just about the current market price, but about long-term growth. If large Japanese firms start putting their money into Palantir, it could create a positive cycle of growth and confidence in the company. In the end, the stronger yen is likely to push Japanese investors toward Palantir, which could drive their stock prices higher. This could bring more attention to Palantir in global markets, leading to even greater growth for the company. But all this is just the beginning. Japan's stronger yen could be one of the reasons why the US government has reacted in a major way. As you may already know, the Federal Reserve has been seen to cut rates over the past few weeks. And if this continues, Palantir could benefit greatly. How so? Why would this action from the US government make Palantir grow? Well, hear me out. Continuous rate cutting could have a big impact on the economy. Lower rates usually mean cheaper borrowing costs for businesses and consumers. This can encourage spending and investment. And here's what's interesting. When rates are low, people often look for safe investments. Palantir could benefit from this trend. With lower interest rates, US investors might have more buying power. They may feel more confident investing in stable companies like Palantir. The company's strong reputation for data analytics and software solutions makes it attractive. And with how their stock is moving, this isn't a surprise. As more investors seek safe places for their money, Palantir could see increased demand for its stock. But this is just the start. Lower rates can also boost overall market sentiment. When the market feels good, investors are more likely to take risks. They may turn to innovative tech companies like Palantir. This can lead to a surge in interest from both individual and institutional investors. And you already know what this means. More people investing in Palantir can drive up its stock price. Lower rates can also benefit the company itself directly. With cheaper loans, the company might consider expanding its operations. They could invest in new technologies or hire more talent. This growth can help Palantir strengthen its position in the market. It can also enhance its product offerings, attracting more clients. As you may already know, Palantir has been filing several patents left and right. This could already be the result of that. Moreover, Lower rates can lead to more government spending. As a tech company that often partners with government agencies, Palantir may see increased contracts. These contracts can provide a steady stream of revenue, helping the company grow further. And this is even more likely to happen, especially if you look at the fact that a huge part of Palantir's business includes government contracts. Higher buying power among U.S. investors can lead to increased stock demand. This, combined with potential growth opportunities and government contracts, positions Palantir well for the future. The company could thrive in a low-interest rate environment. This has even led some people to start rumor mills about the fact that other governments cutting rates could also add to more people wanting to buy Palantir. And over the past few days, there's actually a country whose government also followed the U.S.'s steps. Which government is this? It's none other than the economic giant China. As you may already know, China has announced multiple rate cuts just after the Federal Reserve lowered rates. This move is aimed at boosting its struggling economy. China is facing challenges like slow growth and weak consumer spending. By cutting rates, the government hopes to encourage borrowing and investment. Previous reports also show that this move will provide at least 500 billion yuan in liquidity support for Chinese stocks. And here's what's even more interesting. Lower rates make it cheaper for businesses to take loans and expand their operations. And this has made people speculate that the investment firms that are enjoying these cut rates might look for good investment vehicles. One of these could be buying shares of strong and stable companies such as Palantir. This might sound really good for Palantir and its shareholders, since an influx of Chinese investment might push their stock price even higher. But here's what you need to remember. These rumors might not be true at all. The chances of Chinese firms and huge investors buying Palantir shares is very slim, maybe even zero. Why is this so? While it may seem appealing for Chinese investors and firms to invest in Palantir, it isn't as easy as it sounds. The political and economic relationship between China and the U.S. plays a significant role. Tensions have been rising due to trade disputes and technology restrictions, and this makes cross-border investments complicated. Many Chinese companies face challenges when trying to invest in U.S. stocks. Regulatory hurdles and fears of backlash from the U.S. government can create barriers. Additionally, Palantir is known for its close ties to U.S. defense and intelligence agencies. This association could raise concerns among Chinese investors. They might worry about the risks involved in investing in a company so closely linked to U.S. national security. So, while the idea of Chinese investment in Palantir is intriguing, the complex political and economic landscape makes it a challenging reality. However, the U.S. investors could still pull Palantir up even without the influx of Chinese investment. As a matter of fact, huge funds are continuously buying Palantir shares. One of the latest funds that are doing this include the DFEOX U.S. Core Equity 1 portfolio. They are a $45 billion fund that has increased its holdings in Palantir by almost 41%. This means they now own a total of almost 600,000 shares. This significant move can attract other investors. When a large fund increases its stake, it signals confidence in the company's future. Other investors may see this as a strong endorsement. As more people notice this investment, they might be encouraged to buy Palantir shares as well. This can create a positive cycle, pushing the stock price higher. But what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video and don't forget to leave a comment in the comments section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.